Hello traders, Corey Mitchell here. In this video we're going to look at how long it takes to make money consistently, whether you're day trading or swing trading. And right off the bat, I can tell you it's going to take at least 6 to 12 months if you're putting a lot of effort into this, and we'll talk about what that effort entails in this video. Just putting in time, just looking at charts, just reading material online, taking courses, isn't going to cut it, actually. And it's actually going to maybe waste your time. So you want to do a bit of that. You basically want to find a strategy that you like, and then we'll talk about how you really focus in and develop that strategy for yourself. And then you're going to be looking at about a 6 to 12 month time frame. If you're only able to do this part-time, if you're only able to put a little bit of effort into it, or if you keep getting distracted by, continually reading more and more material, trying this strategy, trying this strategy, trying this strategy, your path is long. You're looking at least a couple years or more if you take that approach. So we're going to talk about why that is, and also the quickest path to getting successful, and that's going to be that 6 to 12 month time frame. And how do I know this? Well, I was a trader on a proprietary day trading firm floor. We had multiple offices all over the world, and I traded there for 7 years. So I just saw a cycle of traders coming in all the time. These were people who were pretty ambitious. Like, they went through multiple interviews, came in each day to trade. We had to be there all day. We could, of course, leave for lunch or something if we wanted, but we were supposed to be there all day and just to learn, watch the market. And only once you were really successful did you get more leeway and you could trade just a certain part of the day if you wanted, which I ended up doing. But these were dedicated people. They went through, this was going to be their job. And overall, only 4% of people made the cut. Most people just couldn't even get to where they could make a couple grand a month, like basic living, just cover even like very basic living costs. So most people just left. And they put in a couple months of work usually. They didn't make any money, and so they left. So my guess is that the success rate would have been a lot higher if people had stuck around for at least 6 months, because all the successful traders, including myself, I was profitable in the 5th month, but it wasn't until my 6th, 7th, 8th month that I started actually making some like decent returns where I could potentially make a living off of it. And so that's where I get that 6 month time frame from. Everybody who ended up being successful took at least 6 months to start getting consistently profitable, where most days they were coming in and thinking like, okay, I can make money, or the months where you're not seeing the negative months anymore. Now, as time goes on, you may have some negative months. That happens, but overall, you know that you're gonna make money over the long term. You have a sound strategy, your method's solid. So why is that the case? Or first, let's talk about these people. We were dedicated. Like, we were coming in every day. This was our job, and it still took us 6 months to 12 months to make money. So I was one of the quickest ones at 5, 6 months, and a lot of other people were taking 8, 9, 10, 12 months, dedicating their entire day to learning to trade. So 6 to 12 months. And that's with having people beside you, too, that could help you out. We had access to an entire floor of traders who were making money, so we could go sit beside them, ask them questions. Once we were making a little bit of money, we could move out onto the floor, sit beside them, find ways to amp things up. So we had access. We also had access to money. We could, as we started getting more profitable, we got more capital to trade with. So a lot of advantages, and it still took us 6 to 12 months. Learning part-time, as I said, it's going to take you a lot longer. You're looking at least probably a year, 2 years. And if you're just kind of guessing and testing things as you go, trying things out here and there, probably 2 years or more, or never. Just that guess and test approach, not going to work. Just trying out different things. So why does it take so long? And this is just a partial list. But when we learn a strategy, if it's a good strategy, it tells us when we should apply it, when we shouldn't apply it. But that takes time to learn. There's also just some things where, so I trade a triangle pattern. Let's see if I can find one here. And people are always asking me, like, how it looks so easy on the chart, but when you actually go to implement it, it looks totally different. So how do I get around that? I talk about that one here. You go through all the textbook examples, but then you actually go to implement it, and there's all those questions in your head, like, ooh, is this valid or not? Is this a real strategy? So it's like you've gone through all these examples, but really what you needed was to start digging in yourself to those patterns, seeing and developing your own confidence, because that's really what's gonna matter. So let me just see if I can pull this up. So here's an example of how I trade triangles, and I have a very specific context, and to me this makes perfect sense, but to someone else it could become very complex. How far does this pullback have to be? Can it move just above this prior swing high, or does it have to be below? And for myself, I have answers to all these questions. It's my strategy. I developed it, so I've seen millions of these things, but to someone who's even gone through 100 of my chart examples, they're still going to have lots of questions, potentially, when they start doing it, until they start implementing, asking the questions of themselves. They start looking at these patterns in real time and saying, okay, yeah, this one really worked out well. It looks like this. This one really worked out well. It looks like this. This one didn't work out. What was different about it? Oh, okay. I see what was different about these ones. And we start asking those questions and answering them for ourselves based on the data we actually see, and that's going to be one of our quickest ways to get to success. But there's still all these questions we have to answer. Just because we see a pattern, we might not have the confidence to trade it yet, so we need to build that confidence up. What else is there? Many people get stuck. Oh yeah, we're never going to see the market exactly like someone else. So that pattern that I trade, you might like it, you might like the idea of it, but the exact way I trade it doesn't really jive with you or something. You see lots of stocks that break out. I'm not in them, or for whatever reason you just don't like it. You don't like waiting for the little trade signal that I wait for. You want to get in a bit earlier or something, or not miss the move. So you might decide to use that idea, but you tweak it and make it your own. And that is a great thing, because then you're confident in it. You've put in the work to make that strategy your own. As we talked about, every day is going to look different, so we're basically having to pick out our small strategy concepts in a sea that is constantly changing. So we have some strategies here, trades that are underway, but each one of these charts looks a little bit different. So you probably can spot some similarities, but you can also spot some differences. And how am I picking out these subtle differences that relate to my strategy so that I can get into these trades and they align with my strategy? But to someone new, they might just be looking and say, like, I don't see any similarities between these. But we need to pick out our data in a sea of, what I say, endless changing and sometimes conflicting data. So we really need to be confident in our method. We can think of this another way, and it's difficult because trading's difficult because if you think of it this way, in a 2-hour period, there's 7,200 seconds. And I'm actually only clicking my buy or sell button for maybe 5 seconds of that. And that'd be, quite a few trades. It only takes like half a second to click your buy and sell button. I'm not talking about like punching in your orders or anything, or analyzing. Yeah, we're doing that all day. Maybe we have our order ready to go. But the actual action where we actually interact with the market and hit buy or sell is probably only a few seconds in a 2-hour period. So that means for the other 7,195 seconds, I have to sit and wait for my strategy criteria to materialize. If I execute at times other than that, that means I've deviated from my strategy. My results are probably not going to be consistent. I'm going to be entering that trade too early, too late, or it's totally wrong based on my strategy. I don't have the skill set for trading at that time. So when you think about it, that's really hard. You're basically, it's like sort of a needle in a haystack. To trade a strategy randomly, you basically have a 0.1% chance of being able to implement it well. If you're just kind of clicking buy and sell buttons, hoping that your trades align with the strategy, that's just not going to happen. So that's another reason it's so difficult, is we're just waiting for these instants where we have a great edge and we're trying to take them. But if we're too late or too early, that opportunity is going to be gone. And I talk about that here. You need to be quick. I see some great day traders who have really good ideas, but they're just a couple seconds behind where I am, and the price has already moved too much, and now their risk is too big. Their profit potential is reduced, and yeah, they're just a little too slow. Or there's other traders who are way too quick. They're just like ready to pounce on their button. So, and they end up in trades too early. The price is still wiggling around. They get stopped out. They're frustrated. Then the move happens. I think we all can relate to some of these issues. So we need to find that balance within ourselves where we know our strategy and we develop the timing skills for when to implement that. When I was trading futures, quite often I found I would get my signal to enter and the price just wasn't quite ready to go yet. And I'd enter, it'd get one more wiggle, would stop me out. I like to use low risk opportunities, which creates high reward opportunities. And I just couldn't seem to find my timing, and I was always getting stopped out right before the move. And then it was a very simple thing of basically, like, once I noticed this was a pattern, my brain was just a little bit ahead of the market, and I told myself I have to wait 2 seconds once I see the trigger. And by just imposing a 2-second pause, my trading improved quite dramatically. And then I used that in other markets as well. I didn't trade futures that long. I went on to trade forex again, stocks, and I just preferred those markets. But that 2-second pause, I still use that often. And in some markets it might be a 1-second pause, just depending on how I'm actually trading. I'll just hold off and I get that trigger and I just say, okay, wait a second, let's see if it actually is going to move. Okay, it's going, boom, I'm in. Or, oh, no, it's going the other way. I can wait. We'll wait for the next trigger. And so little things like that can just really help your trading, your timing. But it takes time to find those things. You need to have enough trades and experience to sort of start to see these things. And that's why trading takes 6 months or more to get good at. There are some people who make money right away, and we see this especially on social media, and most likely you're only seeing people's best trades on social media. But we had an example of this, and this is applicable whether we're day trading or swing trading, because this could be a 1-minute chart. This is actually a daily chart of the S&P 500 ETF. And what I'm talking about is when people make money quickly, it's usually because of very easy market conditions. They just decided, okay, I'm going to buy something and I'm going to hold it, or I'm going to sell something and it's going to drop and I'm going to hang on to it. And the market does what they think, and they make lots of money. But to be consistent at it requires a more rigorous approach. So in 2020, we had COVID, and then it was pretty much a straight line up. We had a couple little pullbacks in here of not too much, a few percent, pretty much straight up. So if you were of the opinion that I'm just going to buy stocks and I'm just going to hang on to them, during this period, it was very good for you because this is the largest 500 companies in the US. And if this is what they were doing on average, you can imagine there were a lot of other stocks that just went straight up as well. So easy money, and of course we all know everyone was talking about how easy the market was in 2020. Everyone started day trading, swing trading, whole new influx of traders started trading during this time. And then we get to about late 2021 and things start flattening out. All of a sudden we're no longer just going up. We had a drop, then we kind of moved up again, but we didn't really advance anything. So if you had bought back here, now you're just barely getting back to break even. A little bit of, ooh, we have a bit of profit here, and then collapse. And since then, that's been the case. We've had these brief rallies followed by much bigger declines, much harder environment to make money in, and all those people I saw on social media that were new to trading and were making so much money, haven't heard or seen from them again. So this is, and like I said, this could be a 1 minute chart, this could be any type of chart where for whatever your strategy is, you have easy conditions and then you're going to face periods where you have hard conditions for your strategy. So you have two choices. You can either step aside and not trade, or you need a strategy for trading in these tougher conditions. So let's talk about the most direct path to trading success. And I think it's, don't worry about what others are doing. One of the most common things I see with some of my coaching clients is that they have a strategy, but they're always looking at what other people are doing, and then it gives them fear of missing out, or they're worried that they're in a trade when one of their favorite traders is no longer in a trade or doesn't like market conditions, something like that. And so there's always this tug of war in their head, making it extremely hard for them to follow their strategy. And that's the important thing. It's your strategy. You're the only one that can make money with your strategy and your account by placing trades. No one else can do it for you. So really the only person you really need to concern yourself with is your own trading yourself. And while you're learning, there's no problem seeking help from others, seeing what they're doing, because you're gathering your ideas of how you want to trade. But once you've decided how you want to trade, then you should be dedicating 6 to 12 months to that approach. And how do we do that? You're just going to focus on your own trades. So turn off other people's ideas and start implementing that approach yourself. Focus on only 1 or 2 strategies. Don't overload yourself. If it takes 6 to 12 months to learn basically one strategy, if you try to learn 4 at the same time, it's going to take you like 4 years. Take screenshots of trades before and after they happen. This is the most valuable thing you can do. I literally have thousands of charts like this that I can go through anytime. So this is Euro USD back in February. And I can go through, see how I traded this day. I can see the price action. I can see how much the price was moving in the hours heading into this trade that I took. I can see what I was thinking, what I was analyzing at the time. I can see how much I made. I can see when news came out because I wrote it down. Now this is an extremely valuable resource because let's say down the road I notice something in my trading and I say, oh, I could maybe make less trades, but I could make a lot more money. Or have a bigger profit target. So I could go back to this trade and say, could I have made more money on this trade? Yeah, if I'd used, so I use a 2.5 reward to risk. That means if I was risking 2 pips, my target was at 5 pips. So that way I always know what this risk is. I could also estimate it based on seeing the prices here. But I could say, okay, if I want to increase my reward to risk to 3, could I have done it on this trade? Yeah, I could. This went up quite a bit further. I would have had to hold the trade for longer, But if I wanted to extract more out of this trade, I could have. I was trading during this entire time, so I could have extracted probably 3.5 times my risk. We can go to the next day, see if I could have done the same thing. Yep, I could have on this one. Yep, a little extra profit there. Probably could increase my reward to risk. What about on the next one? I didn't have any trades. These ones, I was just noting them. Maybe I didn't trade that day, or was just giving notes for someone else. Oh yes, this was a month I think I was telling people to, so that they weren't always relying on my own charts, just look at your own trades, and I put a few notes on them. So the same thing, I could go here again. I could also do this, look through all these charts to find common errors where, like I said, maybe I was getting in too early, maybe I got stopped out, things like that. So I can find ways. I could also look for, could I reduce my risk? A lot of times we find our really good trades, the price moves very quickly in our direction, and we almost didn't even need our stop loss at all because the price just ran. It's only when the price doesn't run and chops around that our stop loss is useful. If the price runs quickly to our profit target, the stop loss could probably be a lot smaller. So this is another thing that you can look at when you study your own trades. And this is the important thing, studying your own trades. Looking at my trades and saying, ooh, I could have used a little smaller stop. He could have used a little smaller stop loss doesn't help you because you might not have the exact same timing on that trade. You would have needed to seen that trade. You would have needed to taken it at the exact same moment as me. 1 second later, 1 second earlier, our entry stop losses are at different points potentially. So we want to really focus on our own trading, and then I can go in, look at my own trades, whether it's in a demo account or live, and say, here, I actually didn't need this big of a stop loss. Here, if I entered right there, I didn't need that much of a stop loss. Here, I didn't need much of a stop loss. Here, I did, but I got stopped out anyway. Here, I did need most of my stop loss because it took some time, but I didn't need quite all of it. So what does this tell me is that at least on this day, and then I could go through more days, and see maybe my stop loss is a little bit too big. So I could reduce that slightly, which means I'm either increasing my position size, or I can just reduce the amount that I lose on my losing trades, and that would be how I could improve. So let's say I'm, made a few $100s this day. By making these tweaks, maybe I bump that up to $250, $300. And we do that every day. All of a sudden, a $3,000 month becomes a $4,000 month, becomes a $5,000 month. We can do this also by reducing the number of mistakes. A lot of times I'll have red trades or orange, something that says, hey, I missed something or I didn't do something right here. By going through all my charts, reducing those mistakes and just brainstorming ways, how could I have missed this? Is it a lack of focus? What do I have to do to keep myself focused during the day? Just brainstorming ideas. And you don't have to eliminate all of them. But if you have 5 mistakes a week, and next week you can reduce it to 4, and then the next week you can reduce it to 3, that's going to be either 1 less losing trade, maybe 1 more winning trade. Again, maybe you go from making $1,000 this week to making $2,000 or $1,500. So it's those incremental improvements that really matter. It's not, this strategy doesn't work at all, I'm going to switch to something else. It's, this strategy works or doesn't work, but how am I going to improve it? So, very valuable exercise, having screenshots of your trades. You want to track them in a journal. You can download some on this page on the website. Just if you click the search box and how long to make money day trading or swing trading, you can find this article. And we can also, these links here, downloadable Excel files that you can track your trades in. And we also want to come up with guidelines for the best times to trade, the best times not to. So we can just go back to one of these examples. And for my strategies here, we can see lots of movement. There are days when I do not trade, and that's when something like this happens. When we start to go into really low movement, and I just don't want to risk my capital in situations like this. I'd way rather have these bigger price moves that were going on back here. So as soon as I start to notice this shift, I go into capital preservation mode, and that is also going to take time. It's a skill that has to be developed because you need to develop guidelines in your own mind for when this is starting to happen. And it's not going to happen instantly. I can tell you, don't trade if the price hasn't moved 10 pips in the last hour. But until you really start to integrate that and see it, and you also get rid of your own emotional desires to trade, because most people, when they start out trading, they think that if practicing is taking as many trades as they can, when really trading is about, as we talked about, picking your points and sitting on your hands most of the time. So seeing this context develop and saying, nope, I'm not going to trade here, but here was still good. And then once this starts moving again, jumping back in. So there's some emotional control as well as developing elements of our strategy that keep us out during the bad times and keep us in during the good times. As we discussed when I was talking about the charts, you can look at ways to reduce your risk, improve your entries, squeeze more profits out of trades, but that's only going to be possible if you have a record of your trades. So those are just some of the ways that you can make the most direct path for improvement for yourself. And if we do that, we can potentially get into that 6 to 12 months of dedicated work and potentially become successful. And again, like I said, if it's part-time, if we're just dabbling, if we're not really tracking our trades, if we're not looking at screenshots, if we're not looking ways to improve, we're looking at other people's trades, it's going to take us a lot longer. So really focus in on what you're doing and how you can improve what you're doing. Whether that method's based on someone else or not, at the end of the day, you have to improve what you're doing, and it's not going to come from constantly looking at other people's charts. It's going to come from looking at your own charts and saying, where can I reduce my risk? Where can I increase my profits? Why did I lose on this one? Why do I keep losing when the market's moving sideways? How do I recognize when the market's moving sideways and stay out? If I have a problem with over trading, if it's emotional, I want to be in trades, how am I going to address that? And on the website, loads of resources on that. If you go to Trading Improvement, these are some of the more psychological things that we can do. We can create trading routines. We can look at when not to trade. We can look at our risk rewards. We can create morning routines that help get our mind in the right headspace. Some of these things, really good. Narrowing down our mistakes. First, noticing our mistakes, and then how to improve on them. So lots of resources in here. If we have those moments where we're saying, I don't want to trade, but then all of a sudden we're clicking our buy button, there's a reason that happens, and that's discussed in this article. So there's really no excuse to always be looking outside. We can look at our own trades and then say, how do I improve on this? And then find resources for that specific problem that you're having, and then seek resources on it. But don't seek resources on trading opportunities. And I post a lot on how I trade, what I like to trade, and that's meant to be an introduction. It's meant to show you some resources or more examples, but once you've started to say, I'm going to trade this way, then again, it comes down to you improving on your own trades, and you should be less focused on what I'm doing. Because I'm also prone to making mistakes, and I have to go through my own trades and make sure I didn't make mistakes. So you don't want to be replicating someone else's mistakes. And so yeah, focus on your own trades, and I think you'll do much better. So this whole article, as you saw, it's also under the trading improvement section, how long it takes to make, if you want to read through this whole article, because there were lots of little tidbits in here that we didn't quite cover in this video, but this video also covers some things that aren't covered in the article. So hopefully there's some good takeaways for you in there. 6 to 12 months, dedicate it. Don't think of trading as I need to be right or wrong. Think of it as you need to dedicate a certain amount of time to get good at something. And even if the strategy you pick right off the bat isn't that great, maybe you just say, okay, I really like this guy's strategy. I'm going to try to implement it. Or you watched my course and you're like, I'm going to implement Corey's strategy. Even if it ends up not being ideal for you, go through this whole process anyway. Spend 6 to 12 months trying to get really good at it, because that develops the skills of a trader. Once you've done that for 6 to 12 months, then it's going to be much easier to take another strategy and integrate it, because you're used to this process of taking a strategy, making it your own, and really refining it and making it good for yourself. So it almost doesn't matter if the strategy is good or not. Take any strategy, because it's the skills that it's developing. And now I can integrate a strategy very easily. So I have tons of strategies. I love developing strategies, and I can switch between them fairly easily, and I can develop a new strategy and start implementing it very quickly and making money, because I've developed this skill set of this whole process we had talked about, of just analyzing trades, getting better at implementing those trades. So once we have that skill set, implementing a new strategy becomes very easy. So it's not time wasted if a strategy is just mediocre. If I'm hiring a trader, or if I wanted to hire a trader, I would want one that could follow a plan, even if it was a crappy plan. They could have the worst strategy in the world, but if they followed it, I'd hire that trader over someone who's making a lot of money, but they have a really hard time sticking to their strategy. They're basically lucking out. So I prefer the more consistent approach. So we'll leave it at that for now. Hopefully there were some good tidbits for you in there. Hit the subscribe button if you like this, or if you have ideas for other videos, let me know. And in the meantime, happy trading.